Hi, my name's Oliver Brown. This is Wednesday, the 10th of October, and we're doing another session of Two Mugs with Stephen Bannister today joining us. Steve, thank you very much.
Thanks, Ollie. Really great to be here. Hope you're all strapped in because at the moment we're definitely got volatility reigning supreme.
Thank you very much. Yeah, I'm ready for the ride, or we've been riding it for a while. Give us a bit more detail what happened. We're now at 213 today, which is a huge step up from the last couple of days, and it doesn't seem to be slowing anytime soon.
Yeah, it's been a wild week. 5 sessions we've added, or 5 days we've added almost 20 cents a pound to the futures price, and that's pretty scary. A move that fast. Last night we saw it move 5%, almost 10 cents at the same time. Why is it moving? I mean, I think that's a really interesting question, and I think there's a lot of dynamics around why. There's a few reasons. I think one is people are starting to believe there's a bigger freight logistics problem out there, and that seems to be attracting more people on the buy side again. I guess buying risk. I'd rather be long and wait. I'd rather have the purchases and wait to sell later than be selling now at the same time. So the farmers, everybody is maybe still waiting. The other big news, I guess, recently is Colombia and what's happening there with a few farmer defaults or supplier defaults and other things, which in all honesty happens when we see prices move at this speed, this fast.
Absolutely. Give us a bit of an insight into, you talk about the people buying, talk about the difference between, the speculators and the technical buyers, the people in the industry who are, who need the coffee, that it's their lifeblood. Sort of unpack that, and when we're seeing this move, how much is which group, or do we not know?
Yeah, I mean, there's definitely, you can get insights with the COT, the Commitment of Traders report that's published by the exchanges twice a week, to understand what is the weighting for different segments, whether they're a speculator, whether they're a producer, whether they're sort of a trade house like us in a way, or a buyer where we're using derivatives to hedge much more than to speculate or anything like that. But yeah, if you break it up, I mean, someone that's speculating is just looking at the trend. So the trend continues to be strong, bullish, positive from the perspective of coffee. So people are buying into that trend again and sort of fueling the fire in a way. And that has challenging impacts on businesses, I guess, such as ours at the same time, where predominantly you have bought inventory and you've sold futures to balance those moving things, because you don't want to have your underlying purchases moving by 5 or 10% every day within your own business. So that's why we have to hedge. But if we're then long inventory, short futures, every time it goes up, then it's also costing money at the same time that we have to put up for margin calls and other things. But that's hedging. That's the dynamic. You sort of, some way, hopefully, you want to work out where today we want to almost buy high and sell low, from the perspective of using the futures markets to do that. So give farmers a good price today when they can, but also when markets align and potentially go lower, in line with roasters' appetite to buy more, then we can be selling at the same time to enable them to have everyone within the supply chain to have a good price.
Now that's such a sort of I think a difficult concept for non-traders to understand why, like, how does buying high and selling low possibly work? Surely you in the middle, can't survive on that. Give us a bit of an insight into, like, how is that?
Well, I mean, it's basically the mechanics of hedging. So whenever we're simultaneously buying and selling at the same time, and we're only looking to capture a small margin from the differential or the cost structure that we pass on delivering coffee to a customer at the same time. And this is where I guess the challenges that start to really play out, is where we're hedged. So volatility in a way is something that we can cope with. But if you're not a hedged business, if you're a roaster, if you're predominantly always short, as a roaster is, you're always needing to buy coffee because you're always burning it and giving it to your customers, or roasting it rather, not burning it. But you're always using it, consuming it, and you need to keep buying more and more and more. And I think that's the big challenge now, where we've been in a constant bracket of price for a long time, and now we've exploded onto the upside of that. We saw that happen with the frost in Brazil in July, and now we're really seeing it with ramifications out of price resetting in Colombia at the same time. But also there's a good argument out there to say we don't actually know Brazil yet at the same time. We've got flowerings, we've got moisture, we've got more rains on the way. But now everyone's talking about, well, we want to see the fruit set in December. And then we'll be a bit more sure of the total damage and how the S&D will look at the same time.
Yeah, that's going to be very interesting. Let's sort of go back a bit, to reverse a bit, and we talked a bit about what was happening in Colombia and the challenges of Colombian producers defaulting on the contract. And again, that's sort of a word we use a lot again in the industry. We understand what that means. How is that actually happening? Give those that sort of listening like an idea of what are the mechanics behind a default, and why does that matter so much to us?
Well, it's an interesting perspective of the trade. I think we're very much protected by contracts and things here. But what happens in a growing country or an origin per se is that really the farmer has one shot at maximizing their coffee harvest every year. And if they've sold forward, if they've sold a few contracts to middlemen, and middlemen sell to middlemen and other things, these interrelationships within the coffee procurement model going to exporters becomes a bit fragmented, because at the end of the day, it becomes the point of the farmer wants to maximize their price. And if they've got a contract here with whoever it is, a middleman, an exporter, someone in between, but the price in the market today could be double what that is if they sold a year ago forward. They will probably prioritize selling their coffee in the open market today and come back and look to deliver that contract that they've made before. So defaulting becomes an easy way to say that, yeah, people are not honoring their contracts. But we've also got to think about the farmer from the perspective of their one chance to monetize the crop at the same time. So sometimes their whole income is based on this harvest, and they do what's best for their family and other things. And this is not anything new in the way that we manage risk or companies manage risk in origin. This is a recurring thing. And it's a challenging thing at the same time, especially because when an exporter has, as the size of someone like the FNC that came out and publicized on Reuters, has commercial contracts all the way out. And if they're not getting that coffee coming in, they're not able to get it out at the same time. Or if they're having to reprice that coffee, then that it can impact their profitability, because they sort of bought here, they sold here and export, and they're all happy. But now suddenly no one's delivering on these open purchase contracts. Everyone's wanting to deliver only at a new contract price. And that's something that, yeah, has to be worked through. But it does upset the chains a little bit. It's interesting though, because there's no actual loss in physical coffee. The supply and the demand dynamics are still the same, but the price relationship of that production changes. So that's why these things can have a bit of a volatile impact.
And obviously has a massive impact on exporters' ability, you know, those partners that we have, and you know, all the others to sell forward as well.
Yeah, I mean, it really depends on the strength of the exporter. Do they have the mechanisms in place to absorb this? How do they treat, and how have they been preparing for this? Because it's probably something that people have been aware of, as we've seen the price per cargo in Colombia change and be volatile at the same time. So the peso, the Colombian peso, has been changing. The local price has been changing. The expectation of the farmers has been changing. That's something that should have been happening and been discussing with your open purchase holders at the same time. So it doesn't make it easy, but I think generally most exporters should still honor their export contracts. It's hard. At the same time, I haven't heard of any export defaults yet, only really internal price challenges. But it may mean again that we could see another price hike in the base differential of Colombia, as people look to, going forward, reabsorb these higher level costs that they're forced to procure at.
Yeah.
And I think given the FNC's leadership role in representing farmers in Colombia, then again, yeah, others will probably follow suit at the same time, potentially.
It's again, it comes back to the discussion we were having about, you know, it's so important that we help our roasters understand the need to make a quick decision, because things are moving so fast. You know, prices are going up, not just on the C market, but also, you know, in individual countries with, you know, with the differentials raising. You know, what I priced out on Friday is completely different today. You know, that's had a huge impact as well, hasn't it, on how roasters and even we need to think about buying coffee.
I think it really comes all the way back to even the psychology of being a buyer, and the way that we've been able to be buyers over the last few seasons has been that if we've waited, we've been able to get a price. And now everything is flipped on its head and dialed up to 11 in a way where sometimes we're forced to make a decision, and that's not an easy thing to be confronted with, especially when you're forced to make a decision that is against you or that will incur a loss, as opposed to being a profitable decision, whether it's for your own business or your employer or anything else. So I think there's a huge challenge just of the psychology itself of making those decisions and trying to, and it's really difficult. I mean, we've spoken a little bit already on like rethinking your cost of production, rethinking everything in your business to be aware, but also with logistics challenges. If we ourselves, even we're trying to think 6 months ahead now. So we have to make a decision now to deliver someone coffee in March. If we don't make it now, I may not have that coffee with the logistics constraints in place. I need to be getting coffee out early out of Central America and other places. If we don't have those contracts, we're in the slot where going through the supply chain and the processing of the exporter, we're going to be at the back of the queue. And I think that's the damaging, the scary thing is if we're not making decisions, we're maybe going to be forced into buying coffee that is not ideal for our business. At the same time, and it's really hard. It's a really hard dynamic. I mean, you're seeing, and for us, we go to sleep. Okay, I'll finish the day. It's 5 o'clock, family time. Come back. Oh, my prices are 5% more expensive today. That's what we woke up to this morning.
Yeah.
And yeah, I mean, that's hard for anyone.
Definitely. Yeah, it's been super challenging sort of working with our partners everywhere, even those that have got good coverage, because even then there are now these gaps with shipping and delivery and even the best laid plans are being stretched and challenged.
100%. I think, yeah, you need a plan F, P, and S at the moment, because A, B, and C have already been challenged and broken in some circumstances. Now we're seeing the country start to open up again. We're going to see more constraint on delivery vehicles, on other things, as more deliveries happen, especially in the hospitality industry and other things. And again, we're having to make decisions that are not ideal for our business in an already super challenging, crazy year. So yeah, it's definitely, it's weighing on a lot of people. And I think it's easier to almost like, okay, I'll wait another day or this or that. And it's almost like, I hope it will get better. Unfortunately, as much as we hope that we win lotto, we generally don't. And similarly with the market and other things, it can stay challenging much more than it can be providing us relief at the same time. So yeah, I really think between now and, I would say, December, but it's probably almost getting close to January now. It's almost just like making sure people are making decisions to have coffee more than anything else, because if you're waiting till the last minute, then it's going to be tough.
Yeah.
But I think also similarly reach out and have conversations with people about potentially what you need. And really be open and honest. I mean, by understanding people's circumstances and price ideas and objectives, that there's potentially things that could be done about that at the same time. So communicating clearly is also really important at the moment for us, so we can understand what is required.
And as you say, that willingness to think differently, to think quickly, and think outside the box to get where you need to go, for sure.
Yeah, I mean, again, you've got to be almost having that coffee available sooner, whether it's price defaults not price defaults, but open purchase defaults in Colombia. That's going to have a ramification on everything in the system, shipping and everything. And yeah, it's definitely not getting any easier.
Yeah, definitely. As you said at the start, time to strap in and continue to ride the crazy horse as best you can. And I guess that's our role, to sort of be there as best we can to fill the gaps and support as much as possible.
Yeah, 100%. I think the more, again, people can be, or customers, anyone is wanting a conversation about what's happening, I think get in touch, ask us questions, ask us challenging questions within this video format that you want us to talk about. At the same time, I mean, I think if we go back a year, we've been telling everyone, buy as much coffee forward as you can before it goes up. And now it's up. That's not an option. It's really challenging now. But it was challenging before because we were in the middle of COVID and no one knew what tomorrow looked like. You had to almost take a guess now into the unknown. And I think today is equally as difficult, even a little bit more financially stressful, that we still have to take a chance into the unknown of what's ahead. But yeah, I think don't try to do all those things alone. Reach out, ask for reassurance, price, other things. How can we solve these challenges? And potentially by working together, we can come up with solutions for people as well.
That for me, the one silver lining is that, you know, Australia seems to always be about 6 months behind the rest of the globe with the impact of COVID, and I can see, and we've spoken to our sister companies and, you know, around the rest of the globe. You know, there is life after this. There is, you know, as customers come back and you know, people start drinking more coffee again and getting out there. You know, we've seen there's been a real uptick and positivity back towards the industry, but I guess we've got to get through this tough time.
Yeah, I think once we can get to that 80% national rate, and we're almost freedom is my theme for this week, bizarrely, then yeah, we can get back to normal. I mean, it's been a horror 12 months for the hospitality industry and pure play sort of cafe businesses. And
yeah,
let's hope that we can get out and about. We've got great weather from here on out. We've got a good summer. People can travel and tourism can come back and everything else. I mean, that's the expectation that really our governments need to deliver, so transactions can happen and businesses can succeed.
Yeah, definitely. Well, you know, let's watch this space, and you know, I think again, you know, reach out to us both in terms of asking questions of how we can help, but also reach out to us on any questions you might have about what we're talking about today as well. I know that we've had feedback. Sometimes Steve and I get a bit technical. So if there's any question you have, you know, it might sound daft or you don't want to come across as you know, sounding naive by asking a basic question, don't hesitate to. I think Steve and I sort of live this, so we forget that not everyone knows what a CO2 report is, for example. And that's a big part of that interaction. So please do reach out and you know, keep asking those questions. Thank you very much, everyone. Thank you, Steve, and been a good week.
Thanks, Ollie. And the only rule with questions is there's no stupid questions. So look forward to anything that comes through.
Absolutely. Thanks, Steve. Much appreciated. All the best. Thanks, everyone, for joining. Goodbye.